Hello folks, good morning. You're welcome to this week's commentary for the dollar and foreign currency. So quickly, we're going to run through the economic calendar, forexfactory.com. We're going to check if we have high and medium impact news events going into the week, and if we have news events we do not want to be trading, like the FOMC, CPI, and of course we know that NFP is first Friday of every month, so we are gone past first Friday of the month. So we are checking through the economic calendar to see if we have the high impact news events coming up on any of the trading days. All right, indicated by the red box that you see here. The medium impact news events is the orange box right here, and the yellow box simply means that it's a low impact news event. Okay, all right, so you see low impact expected. So you just go through all of the days to see whether you have those kind of news events unfolding. You can see this is Monday 13th of November 2023, and we do not have any high or medium impact news events on the assets that we like to trade, the dollar or GBPUSD. So this tells us that we might be having a low volatility day throughout today, okay, because the absence of a high or medium impact news events in a trading day, it's going to impact a slow price delivery. All right, you should expect slow price delivery during that day. On Tuesday, you can see we have a high impact at the open of London, 8 a.m. GMT +1, and we still have CPI on Tuesday, 2:30 p.m. GMT +1. So we do not want to be in this market. All right, we do not want to trade CPI. We may have to be out of the market ahead of the news, all right, so that we don't get to experience the speedy price delivery that may be coming to the marketplace. All right, Wednesday also we have CPI on the GBP. So you just go through all of the days and take notes of the high and medium impact news event on the type of assets that you want to trade specifically, okay, and the time that that news is going to come into the market and the impact it's going to have. Then you quickly go to your trading view to analyze the benchmark asset, which is the dollar index in this case, because we trade a dollar associated pair. So we will quickly have to do a top-down analysis from the monthly and weekly time frame and refine it into the lower time frames to see what the market has for us this week. So this is the monthly time frame, and as you can see, the market had traded off a discount level of this previous range that was created between the low to the high. 50% is this line below 50%, is that fair value gap, and also the bullish breaker. So price traded into that level and created a new bullish expansion that change structure. All right, this is a shift of market structure that created a new bullish breaker with a fair value gap. So price traded right into that fair value gap, and what we are expected to see here is we want to see price action trade up into these levels. This is a bearish order block, the last buy candle that was traded through by a sell candle. All right, so you can see that there is also a volume imbalance here that was violated. Price would like to trade into that level. Institutions will be looking to this level, and ultimately the relative equal highs of the body of the candle is here, and the low resistance liquidity run that I see here. All right, so that is the drawn liquidity, the buy side liquidity pool residing within that range and above that range as an external range liquidity. Okay, then we quickly go to the weekly time frame to further refine this trade analysis. So you can see on the weekly time frame, of course, price traded back into a previous old high right here. All right, you can see that this was a level of price took out the low, price took out the high here, closed above it. That's a breaker block, so price traded down into the high there. Okay, so institutions are pairing up their long positions here, all right, with the previous shots that happened around this level. This was the last time a buy happened before all of these shorts. Institutions are undoing those shorts and pairing them up with new long positions. So this is typically a resistance level turned new support right now. So we are looking to see price trade up into this liquidity void. You can see it right here. We want to see price fill up all of the liquidity void right here on the weekly time frame and possibly trade into the buy side liquidity pool residing above that old high right here. Then on the daily time frame, we are looking for market structure. We want to sustain a bullish market structure because the order flow is bullish, so we want to see price continuously from higher high, higher low, higher high, higher low, higher high. Price went into consolidation, or rather accumulation of contracts, manipulation of retail, and price is seated at a bullish order block on the daily time frame. You can see that that's a bullish order block. The last sell candle that was traded through by a buy candle, price traded back into that level. Okay, this is also okay a discount level between the low to the high. This is discount, bullish order block, so price is finding support at that level. We are looking to see price sweep all of the low resistance liquidity run above the relative equal highs right here and trade into the monthly and weekly levels. So when you go to the 1 hour time frame, you would see that price had actually even created a shift of market structure after it traded into that daily bullish order block. You could see that price created shift of market structure bullish. You can see that price took out the low of the previous week, previous 2 week, the low of that Friday. Price took it last week, then created a shift of market structure on the 1 hour time frame. All right, giving us an entry signature right here. You can see that the fair value gap with an old wick in between. I taught this strategy right on this channel. You should go down and study the video, institutional order flow entry drill. So price traded down into this level. This would have been the entry, the low of the fair value gap here with our stop loss below here. So this is our first entry, and price continuously created an expansion higher. Okay, so this week we're gonna identify this week candle open and see where we are headed to. So this is the low. Okay, I'm coming. So the open is 105.801. so let's see that 105.801. let's see where. So that is our candle open for the week. All right, this line is indicating the candle open. So price opened, okay, traded below, and price is consolidating around that level. I would like to see price trade into this discount level. Let's measure between the low here to the high. I would like to see price trade into this bullish order block or the fair value gap right there to form the low of the day before we trade up for today. Okay, because if you take a look at this closely, price swept liquidity below here. Price created a new shift of market structure. I would like to see price trade into that bullish order block. Bullish order block that has a tiny fair value gap attached to it. Where's the fair value? Take a look at it. Tiny fair value gap attached to it. Okay, so this is my expectation for the dollar this week, and I'll be looking to do the opposite on GBPUSD because it's obviously the pair that I like to trade. So just the same way GBPUSD is creating, let's check the monthly time frame. Monthly time frame is also in a bearish order flow. You could see that price traded into a premium bearish breaker, created a new displacement lower with a fair value gap. So price traded into that sell side imbalance, buy side inefficiency right here. You see that gap between the low to the high, 3 candle price action, 1 2 3, that's fair value gap. So price traded into that fair value gap, and we're looking to see price trade below this relative equal low here and the bullish order block there, ultimately below that old low, because that will be the draw on the liquidity. On the weekly time frame also is price reacting to a bearish breaker. You could see that price formed higher high, then shift on market structure lower right below here, then price traded back into a fair value gap right at the bearish breaker. That is confluence, more than one reason to execute a trade. All right, so on the daily time frame we are paying attention to market structure, and of course price has been forming lower low, lower high, consolidation, price manipulated retail and traded right into a bearish order block with a fair value gap on the daily time frame. Okay, then created a displacement lower. So this week I'm looking to see this guy to trade into that daily fair value gap right here. Let's see that. I like to see GBPUSD tap into that fair value gap, then we will continue to short the GBPUSD while the dollar is heading for buy side liquidity pool, and we'd like to see this guy trade into the low resistance liquidity run below here. Okay, this level we'd like to see GBPUSD pierce the lows and trade into the relative equal lows residing below here as well. Okay, this is also in confluence with seasonal tendency. All right, so I hope that you understand what I'm trying to communicate in this commentary, and I wish you good luck with trading this week. Make sure you apply proper risk management, don't over leverage, don't over trade, and if you are looking to join our private mentorship community as well, you can just hit the link on the description of the video and reach out to us. We're going to give you access to our private mentorship community. Until next time, wish you good luck, good trading, stay safe.